Happy birthday, America. Happy Independence Day. Let's take a look at the charts together. And over the period of the next 5 minutes, I think you're going to have a far better understanding of where the Bitcoin prices come from and where it could be going next. I hope that you choose to stay with me for the whole episode here and that you hit the subscribe button because I really put my heart and soul into these episodes on a daily basis. This is Bitcoin Technical Analysis with RockyOutcrop. Thank you so much for joining me. Now, how are we going to understand the last 3 years of price action in the space of a couple of minutes? I'll show you just now. If you remember trading this yourself, if you're around, you'll remember that the lows came in around December 2018 after the all-time highs up here at 20k. And there was a parabolic run up to this prices in around about the 14,000 point in around about last year at June, July 2019. The prices subsequently dropped off a little bit, looked like they might be going back up again towards those sweet, sweet Valentine's days in around about 14th of February 2020, before actually ultimately dropping off and doing another 60-odd% decline in prices down towards Friday the 13th. This section here is actually a key to understanding the whole of the last few years of price action. Just take a Fibonacci retracement tool here, drawing it in from the highs that we had in June, July 2019, taking it down to the most recent lows there in March 2020, and just covering up the price action and putting this whole thing into context dead quick. You can see that the all-time highs are the equivalent of a 1618 retracement here from the highs that we had in June if you look down towards the lows in March. So if the price action were to continue to go all the way up here after this, having broken through the 236, the 382, the 50%, the 618, then the 786, then 100%, then on up and up and up and up, and went to the all-time highs, what would that be? A 1618 retracement. Now, if you know about Fibonacci, that's significant. How else can we put this price action into context, you're asking? Well, if we take it from the lows over here in March 2020 and go up towards the most recent price action highs in June 2020, then we can see that there's an almost exact alignment of the 50% on the June 2019 till March 2020 Fibonacci retracement line at 8,900 and the 236 on this most recent of price action Fibonacci retracement tools coming in there at 8,889 as well. So those two are right on top of each other almost. And if I just zoom in a bit with the price action, you can see how this has actually operated so far. Now, the prices have come down to this area and found support, so to speak. Indeed, at least there was profit taking happening from people who were shorting it from June the 1st down towards this area, and we're asking questions in around here now. At the moment, you could look at the current price action as being within a pattern of various different shapes. For instance, one of which could be a sort of descending triangle, as you can see using this yellow lines at the bottom, and this one I've just drawn in. Another one, of course, could be a sort of channel down the way as well, and another one could be a wedge towards the downside, incorporating this section of price action since the 1st of June. On the 2-day time frame, you can see here that there is a lower high in and around that price, but the wick is what we're using on the 1st of June in order to make these calculations. But this lower high is significant because overall what it means is that it looks like a sort of rolling over the prices with a descending triangle on the right hand side of them. But it actually becomes even more interesting when we go to the 24-hour time frame, because over here on the 24-hour time frame, excuse me, the Fibonacci's have disappeared, but we no longer need them. They've provided the context that we needed for just now. You could take a look at this area and say that this is kind of like a shoulder, this is kind of like a head, and this is kind of like a shoulder. And we can look at the price action or the volume as well to kind of get an idea if that would make sense. And looking back over the last period of time, we can see that since this shoulder came in and then the head and then the most latest shoulder, that this has actually been diminishing price volume the entire time, which ties in with the idea of a head and shoulders. Now, what about the duration of this period as well for a bit more context? Well, taking it from over here, say where this shoulder is to where we are most recently, you can see that that's about 58 bars long. And in terms of crypto and Bitcoin, that's around about the ideal time for a head and shoulders to take place. Let's just do a quick comparison. What about this inverse head and shoulders that we had over here in around about November till January of 2019 to 2020? Well, quickly, just here's your shoulder, here's your head, here's your second shoulder. And if we take a measurement to see how long it lasted for, we can see that it actually lasted for around about 50 bars as well. So the 50 bar time or for a head and shoulders to develop seems reasonable enough. If that were the case, where would the neckline be at on this thing? And I think it's fairly easy to see that the neckline would probably be in around about that 236 line there. Of course, as well, where the 50% is on this one. So that puts everything into a bit more context for us, so much so that we can just dive on down and actually, well, perhaps some people would like to see a measured move off the back of this head and shoulders. So if you were to take it from the tops down towards the sort of neckline here, and then pop it over to where we have the price action most recently, where would that take us down to, or sorry, the neckline here, sorry, where would that take us down to? Around about the 7,000 area, but that's not how you use these correctly. If you want to do a head and shoulders pattern, and that then we actually have to times the measured move length by the percentage chance of meeting the price target, which is around about 60 or so percent. So you can actually take this up a bit here, and you could say that there's a price target then around about that $8,000 level, going back up to the 2-day time frame and just checking in with where $8,000 comes in around about. We can see the 382 is here at 7,937. So that would provide a bit of context. If we did come down here past this neckline, we could see a turnaround at the 382, which of course is the most common, or the 382, the 50%, and the 618 are the most common areas when you're looking at Fibonacci for turnarounds to happen at. So this would be your clear profit taking line for us here, here, and here. Now, is that unusual? Well, let's just put this again into a little bit of context by taking another Fibonacci here and drawing it in from the lows that we had over here in the 2019 lows. Sorry, I've chosen the wrong tool there. 2019 lows, Fibonacci retracement. I was selected at that time, I hope so. Up to the highs here, and you can see that when the prices came back down low, the 236 here, they dropped down to the 382. That was significant. The 50% was a significant area of support before we went back up again, forming the right-hand side of this potential head and shoulders here that was on the charts previously in February before crashing on down again. As you can see, there's a bit of an inflection area in around the 618 here before we actually ultimately coronavirus the price action right down to those lows. So that's just a little bit of context, but we don't need that there because, of course, we know all about that anyway from various examples across time of the 618 area being important, and the 50% and 382. Another little thing then, I suppose, that I could just point out while we're at this is, of course, this shoulder, this head, and this shoulder, just in case you're wondering what I was talking about there, and draw in a measured move from this thing down towards where the neckline could have been, take it off to the side of the neckline, look down the way, and you can see that it actually went even further beyond the full move. But this took us down back to the 236, which invalidated this Fibonacci and let the prices drop on a bit lower down. So you'll be eager to know then, where does that leave us in terms of the price action in the most recent short-term time frames, like the 4 hours. And if I just want to then introduce the oscillators again, we can see that if we look at this as a trend here to the downside, excuse me, in this section here, and ask a couple of questions. Is there any bullish divergence or anything like that showing up which could lead it towards us actually not succeeding in this head and shoulders movement? Now, what are the chances of a head and shoulder working out? Well, actually, they fail more than 65% of the time. So there is a 2/3 sort of chance that it won't work out. So you could have, if you want to be bullish off the back of this, then you could be. But anyway, let's just look at this for a second and say, well, what do we have? If we look at this low here, for instance, followed up by this low here, how did they shape up and were they divergent? Well, actually, you can see that they were. This low and this low are positioned higher on the RSI, the stochastics, and indeed they're divergent on the DMI down below as well, while we got lower price action on the actual candles there as well. So then if we look over to where the most recent of lows came in at, this one here, how does that shape up with regards to divergence, comparing this low and these other lows previously? So I've circled that one. I can bring it up and we can look and see, well, this here is certainly higher than these two over here. So there is a degree of bullish divergence coming in around about this point of the 236. Now, is that actually saying to us it's going to go one way or the other? No, it's a bit of a warning sign. And it's a warning sign that's coming in at a very crucial levels of price action. So if the prices were to break towards the downside, you'd understand why. And if the prices were to break towards the upside, you'd understand why as well and have a bit of context for them. So then let's look down towards the 1 hour time frame and see if we can see anything which might actually give us a couple of quick targets for the prices. Well, we have our previous high over here in about this area, about 9,700, and we have the previous lows as well in around about this area at the 8,900, 8,800 level as well, where we saw the prices come in at and where that 236 Fibonacci is. And this could be considered to be your current range. Breaking beyond either of these two areas means that something has changed. Breaking up above this top area here means that you would have a higher high, and you could look towards things like divergence and whatever else could be happening at the time, and you'd have an invalidated head and shoulders pattern. So that wouldn't be happening. And an invalidated pattern is as significant as a validated one, where you could make trades off the back of that as well. On the downside, breaking down below this 236 here would of course be quite significant and look towards perhaps lower down targets as well. So we can consider this to be the range. We're taking trades within the range is often a very profitable strategy for people. I'm not a financial advisor, none of this is financial advice, but you do have easy to manage risk wise position areas to look to here. For instance, at this line. And at this line, if you were to short it here or long it here, you'd be able to manage your risk quite easily, choosing to stop out with having had minimal losses should it move beyond either of those areas without without you being willing to stay in your trade. That would be fine. And I think that's good enough really overall for now. If we take a look back to previous episodes that I've done, I've not made it in 5 minutes. I was never going to. Subscribers know, but I really do appreciate you joining me. If we take a look back to all of the sort of previous stuff that we've been talking about in all the other episodes and what you get, I just wanted to show people who are new to the channel that there's a lot of context here that we put out all the time. For instance, on these low time frames, we have all these price targets written out. We have lines labeled them. We've got patterns. We've got a parallel channel. And going up the time frames, you can see that there's actually quite a lot more information, like the bullish divergence here, notes referring to the golden pockets, Fibonacci retracement tools, a whole load of price targets. And you can see the parallel channel in the background with this fallen wedge here. Moving on up the time frames, you can see that in the background we have this sort of rising wedge with a fallen wedge in the foreground. If we go up even further, we can see that we've got this is actually meant to be an ascending triangle here on the charts with a descending triangle in the foreground as well, giving you this conflict and and a whole context on what's actually happening with the prices. So if you tune in on a daily basis, that's the sort of thing that we normally talk about. And I hope you've appreciated today's episode and enjoyed it. I'm going to tune out now. I've been Rocky Outcrop. I really do appreciate you tuning in today. I would massively appreciate it if you hit the subscribe button and chose to come back for more. That would be fantastic. And if you shared this video with a friend, that would be wonderful too. There's a link in the description towards the Discord. In fact, I'll probably put it in the first comment as well. So you can join me there and say hello if you like. You can also find me on Twitter, Rocky_Outcrop. Thank you so much for joining in. This has been Bitcoin Technical Analysis from sunny Edinburgh, Scotland. Thank you so much for joining me. Happy birthday, USA. See you next time.